Hi there, Facebook. This is Wes Moss doing another Facebook live video. It's Friday, and it's the day after the British voted to leave the UK. So it's Brexit Day, and really a remarkable day in history that we've got the UK. It's no longer part of the EU. So 28 now comes down to 27. It's been a long day here at CIA. We call it sometimes we'll refer to our firm here as CIA Today because we publish a lot of content, and today we worked a lot on making sure our clients, listeners, friends are understanding what's happening with Brexit and what the aftermath is. So I also worked on an article for the AJC called 5 Ways Brexit Impacts Your Investments. Also on Facebook, I did about a 10-minute overview podcast about what this means from an investment standpoint. So anyway, thanks for joining. We're going to do a quick Facebook Live on really just these 5 quick questions. First of all, as I look at some of these notes, Europe was really a disaster today. If you look at some of the FTSE or the UK stock market down about 3%. If you look at some of the other European countries, Spain, France, Italy, you're talking about anywhere from 12, 13% down just today. So a lot of market activity today when it comes to global stocks. Really, the brunt was the least severe here in the U.S. with the Dow down about 3.5% on the day. So there's certainly an impact here, but it's not nearly as bad as what happened overseas. Here are the 5 bullet points that the most frequently asked questions that I've been getting. Number 1, what's this mean for U.S. markets? And number 2, how does this impact your 401k? 3, what does it mean for the U.S. economy? What's it mean for the UK? Number 4, and then what should you do? Now, number 1, we go through these panics all the time. I went back to 1907. There's 51 of these panics that have happened over the past, call it over 100 years. And the average panic that is a couple days, let's say anywhere from 1 day to a 2 or 3 week period, is down about 7%. So pretty significant, close to a full market correction just for one event. And we're talking about the panic in 1907, the crash in 1987, World War I, assassination of JFK, the Cuban Missile Crisis, 9/11. We're talking about really seminal, difficult events in our history that have led to big stock market sell-offs, as you likely imagine, and you probably remember some of these. The question is, how long does it take to come back from that? And the answer is that only one market month, or let's call it 22 trading days later, the markets on average are from that 7% decline are up about 3%. You go another month out and markets are up around 5%. Go 126 days later, you're talking about up about 9%. So there's a lot of recovery that takes place very quickly, even when we go through these terrible, terrible events. And this one is certainly not a terrible event from a loss of life. It's not a tragedy from an economic perspective, or it's not a tragedy from a human life perspective at all. But it is a geopolitical event, or really a political event. This referendum is a once-in-a-century vote. It'll probably pale only in comparison to the vote that's coming up here in the United States, which is certainly this November. How does this impact your 401k? The question here is that if you have international holdings, and in your 401k, if you have international holdings, particularly, and I've talked a lot about this over the last couple of months with target date funds. Target date funds are typically very heavy in international. So if you see your 401k statement, it may be a little bit depressing from this month, particularly if you're in a target date fund and it's heavy international, or you have international funds that obviously have taken a much bigger hit than the U.S. But high-quality U.S. bonds, which are typically pretty common in a 401k plan, they have actually held up really well. In fact, we're net positive today. That was Mallory in the background playing a video. Probably were you trying to figure out my Facebook Live?
Sorry, I was.
Mallory is our marketing director here at CIA and makes me do all these videos. But I love doing them. They're fun. So number 3, what does it mean for the U.S. economy? Well, I go through my economic chime: consumer spending, housing, interest rates, manufacturing, and employment. I'm not going to go through all of them here on Facebook Live, but I can tell you that all 5 of those really important categories, CHIME, they're all showing signs of relative strength, and they're showing signs of life. So in totality, the fundamentals of our economy right now they're not terrible. So they can withstand these shocks, and particularly a shock where so much of this has to do with the uncertainty. The UK leaving the EU doesn't tomorrow create a dramatic recession here in the United States. It just doesn't happen. And nothing really even fundamentally will change for probably 2 years with the UK. So my point here is that our economy is okay, and this doesn't mean a recession right out of the gate just because of what's happening in the UK. However, in the UK, there are a lot of studies, and whether these were propaganda studies or not inside the country, show that the UK will lose between 2 and 6 percentage points of GDP over the next by 2030. That'll cost the average UK household $6,000 per year, which is a really big number, and very likely will lead to a recession there. Number 5, what do you do now as an investor here? And thank you for that. I'm glad that you think that's a great question. There's obviously, this creates a lot of uncertainty, and the fear is that this could continue to unravel. But nothing's happening overnight. And I look back and I see that we have had much more politically, economically, and periods of time that were not times of peace. And you can argue whether we're in a time of peace or not with a war on terror. However, we're in a period of time where fundamentally demographics are still good. Companies are still making money here in the United States. So this is not a time to give up on the U.S. economy or the market or panic and do something that is an irrational investment decision. We have to remember that, going back to that historical study I just talked about, we typically recover from corrections like this pretty quickly, or we recover from events like this market-wise in a pretty short period of time, in a matter of weeks and months, not multiple years. So I want you to keep that in context. I know that there are going to be a lot of scary headlines, and there's a lot of uncertainty that is surrounding what's happening in Britain and their economy and stock markets, and this could certainly impact markets for a while, for the next several days, weeks, and maybe even months. But do not let those doom and gloom headlines and stories that you read scare you into doing something bad or something irrational. Remember that so many the returns that we get as investors over time come in these short bursts or short clusters. So you've got to be there invested in order to get them. And if you're trying to time the market hopping in and out, it typically goes very wrong, even for the very smartest investors. So with that, don't let doom and gloom scare you in coming days. Remember that newspapers, even though I write for the AJC and I love the AJC, remember newspapers are in the business to sell more newspapers. And that's the world that we live in. So don't let them scare you. With that, thanks for tuning into this session of Facebook Live, about the Brexit aftermath. Of course, Money Matters this Sunday, 9 to 11. I'll take your calls, questions, and happy to help. If you want to find me and the team, you can go to my website, wesmoss.com, of course, send an email. Those emails come straight to me and the Money Matters team. Listen, don't worry about Brexit over the weekend. Just enjoy your weekend here. I hope it's safe. I hope it's enjoyable. And thanks for tuning in.